Hey everyone, this is Ryan McKenna, CEO of McKenna Capital. Thanks for joining us tonight for our Bitcoin Mining Fund 4 investor update. We have several announcements and changes for the fourth and largest Bitcoin mining fund ever with Tozy Capital. We have Eng Tang, CEO of Tozy Capital, here with us tonight, and he's going to be going over all the recent updates as we get ready to launch our first set of miners at the end of this month. As I'm sure most of you are aware, there's been a change in market conditions, world events such as the Russia-Ukraine war and high energy costs that have all impacted initial plans. And we're making several adjustments here just to optimize the fund and improve performance and take advantage of these these market conditions. And with this being a very dynamic market, these current conditions provide an amazing opportunity to achieve better value. And we've taken advantage of that value. A really nice buying opportunity with Eng is going to go into more detail, but we've gotten a significant discount on the Bitcoin miners, which is allowing us to acquire many more miners than we initially thought we would have for this fund. But with these changes, we wanted to offer investors an opportunity to exit the fund if they so desired, or an opportunity to increase their position in the fund if they'd like to. This wasn't a scenario where we had many investors that wanted to opt out. We just felt like, hey, we want to be transparent. And if someone was a little uncomfortable or, just with the volatility, we just wanted to give that, we thought it was the right thing to do. But overall, it was actually net positive. We had more investors add to their positions. And I think Eng and I had mentioned, we're very bullish. We're both adding to our personal positions here. So just know, until the end of the month, if you wanted to increase your position or jump into the fund, we are still taking new investors in. But if you did feel like, hey, this, you had a change of heart or this wasn't for you anymore, certainly no problems leaving the fund. So as Eng goes through the presentation here, we're going to take questions, but just know that we will do a Q&A at the end, and there's actually a Q&A box. So if you want to type your questions in there, it'll give us kind of a running tally of all the questions. And so we'll make sure we go through and answer any and all questions that come up. And as mentioned before, we'll be recording this for any investors who can't join us tonight. But I do want to thank everyone who is here tonight. We appreciate you taking some time to listen to the latest update. We think you'll enjoy everything that we're going to share with you tonight. So with that, Eng, why don't you run away with it?
Thanks for the introduction, Brian. And hey, everybody. It's actually, I was able to meet Ryan in Denver a few weeks ago. Very excited about that opportunity. If you guys haven't hanged out with Ryan, he's a very fun guy.
You are too, Eng.
Thanks. I have never been more excited about Bitcoin mining in the last 3 to 4 months. I think to be fair, I was probably more excited when Bitcoin was at 66K, but that's because I had a lot of Bitcoin. In terms of going forward, and I haven't been more excited as I personally tinker with the model all the time. I look at what's optimal. I have many plan Bs and As and Cs and Ds. And I think the plan that we finalized a few weeks ago is optimally ideal. And I'm going to walk you guys through what changes there are, how that's going to affect the model and the projections. And then we'll go into questions. As Ryan knows, I've been probably one of the more, I think, realistic people in Bitcoin mining. I have, fairly good understanding of the model of how difficulty and price impact each other. And talking to many of my peers who were just making some really interesting decisions over the past few months, I could not get a sense of why they were doing it. But the market has materially changed enough that it's a really great time to get into Bitcoin mining. And we took advantage of those changes. So we're going to have a very quick deck, highlight some of the changes, talk about the finalized plans, and then what has changed, and then go through investor projections and talk about our sites, and then just finalize it with project timelines. Probably go that pretty quick. Feel free to ask questions throughout the presentation. Ryan, feel free to interject if there's something that's interesting or that's pertinent to the slide, and then we'll just go into Q&A, of course. So what are the finalized plans for Fund 4? Well, we have a partial deployment happening right now in 1,400 miners, or 29% of hash power going live, and that's at 22%. It's 29% of hash power going live in a few weeks, essentially going this week and next week. And we expect to start mining fully for this partial deployment in April and send investor returns in May. So in actuality, this was the sort of stated timeline all along. It's just that we're not going full, but we were always planning to do a partial deployment because it's a lot of work to put in that many miners. You literally have to plug them in, refresh the OS and check them, and it's just a lot of manpower, which is very hard to do. Usually doing around 100 at a time every day. When server crew is doing around 100, 125 a day. And so we have a couple of miners already online, but we'll probably do the partial distribution in early May for April's full and March's partial returns. And then for the second part, and the very exciting part, is a partial, really majority deployment in Texas with Compute North. This was a contract I signed last year. This was not really a plan for Fund 4. It was a plan for like Fund 5 or Fund 6. But with all the other delays and other macroeconomic changes, this became the more ideal plan. And I'll talk about why. But the big news is that we also have ordered 5,000 miners direct from WhatsMiner. So these are the M30S for a little bit less than $5,000 a piece, which we were projecting initially around $9,000 for Bitmain S19s. These are going to be around the same terahash, and we get it a lot cheaper. Of course, Bitmain S19s has also fallen down, but they still maintain a premium, which isn't necessarily warranted in today's market. So we're going from value, value, value. And so it's going to constitute 61% of hash power going live in a few months. And here's where I've been burned many, many times before. Even though I ordered a July batch, they'll ship in July. I hope they land in July. It'll take a long time to put those 5,000 miners in July. I ordered a July contract with Compute North. Actually, it was June. They're already delayed 1 month, but they're very firm that it'll be July. That's why we coordinated, and then we placed the order to coordinate exactly how many miners we have to place into this. By the way, I know that New York is a really great site because I have close to 2,000 miners already in New York as part of my Fund 3, creating a lot of Bitcoin right now, literally making more than 1.5 Bitcoin a day. So a lot of Bitcoin. So operations start in April. As I mentioned, distributions happen in May. I was tempted to do distributions in April, but we're going to do a test distribution in April. So over the next few weeks, me and Ryan will send you guys notifications on how to give us your wallet, what wallet is, how to set up a wallet, recommendations, probably do some videos. And then, it just take a little bit of time. We want to get everyone right. We want to then send 0.001 Bitcoin to your wallet. And then we'll have a process for you to confirm. And once we get everyone confirmed, hundreds and hundreds of people confirmed, we'll then be very secure that the next Bitcoin distribution, much bigger one, will be sent. And then in the future, we'll be sending distributions usually in the first half of the month, usually the second week, where after we settle our expenses and pay and then liquidate some Bitcoin for investors who choose cash distributions, and then send the rest Bitcoin to us. But usually after the first month, it should be pretty easy, at least for me. But the first month does take some time, so bear with us. We're working a lot of distributions. Literally, probably by in 3 months, we'll probably have close to 600 Bitcoin distributions every month, 600 wallets. So the finalized plan calls for 1 exahash. I'm not sure you guys know what that means, but it's 1,000 petahash, which is 1,000 terahash. One machine is usually 100 terahash or 88 terahash. There are some miners company that are going public or have gone public in the past few months at $100+ million valuation that have half this amount. I just want to reiterate that we are one of the largest Bitcoin mining institutional investors and probably one of the largest private equity investors in America. And we probably have a lot of good plans for Q4 as well. So this is a very big change, and I'll highlight what precipitated those changes.
And before we jump into that, we had one question come up on the method of distributions, whether it be Bitcoin or ACH. And the question was, I think, when can we decide that? And we haven't sent out anything regarding that right now. We've been waiting till we got closer, and we didn't want to overwhelm investors. So within the next few weeks, you'll get an email, and you'll be able to choose whether you want to receive the distributions in Bitcoin or via ACH. So no one has missed anything yet. We haven't sent out that communication, but we will. And so over the next couple of weeks, you can expect to receive something. Then you can decide, how you would like to receive those distributions. Yep.
And as a reminder, you can change in the future, but try not to. I think it'd be easier to get in Bitcoin. You can sell it unless you had issues with your Coinbase account, like I have, and but it's something that will probably take a few weeks, probably up until the end of April, to collect everyone's Bitcoin address and test that. So we'll probably do a few phase approaches to send it out, because obviously once you send it out, you can't get it back. But we've successfully done it for 3 funds before, so kind of know what we're doing. So I just need you guys to cooperate, but we'll give you clear instructions, and we'll probably have, I think it would be a good idea to have an education webinar on how to set up a wallet and how that works. So maybe we'll do a recording, Ryan, on that.
Yeah, I think that would be good. That was another question that came in for anyone who's never set up a wallet before. I think just a quick video to show kind of the steps involved, so someone can reference that as they're setting up their wallet, and at least just kind of know what the look and feel of it is, and how that works. So yeah, we do intend to put together a little tutorial video with steps, and then obviously we want to give you the opportunity to choose your wallet of choice with whatever provider you want to go with. But just as far as kind of the basics of setting up a wallet, how a wallet works, we're planning on putting together a video on that. So just rest assured, we'll help walk you through this, because even setting up my wallet for the first time myself, it was definitely a different experience, but it's actually was easier than setting up a bank account once you kind of got the hang of it. And so yeah, we'll definitely make sure we hold your hand along the way here to get you up and running.
Yeah, and don't rush. Do it. If you don't get in time, you go on vacation or whatnot. We have accounting. We know how much we owe you in terms of Bitcoin. So we'll make sure that you get what you guys should deserve. So get back to the macro and micro impacts. So as everybody's aware, a lot has changed since we first presented this investment. A lot of change on the positive note, actually, since our last State of the Union investment update. And so I want to highlight this zigzag journey that I've gone through. And Ryan knows this. I've been pursuing lots of plans, and I still have lots of plans. But one of the big things has happened, obviously due to the current events with Russia and Ukraine. Energy prices have gone up. That has had a cascading impact on several of our sites that I've been pursuing, some sites that I haven't been really announcing, because this actually is rather secretive industry. But we will no longer be pursuing the Ohio site. We believe that the prices of energy is a little bit too high. And more importantly, the load study showed that we could only get half the power, while the landlord wanted the full rent. So we were actually already allocating capital and data center space there. So we then shifted that to New York quickly, and now they're starting to pay us for those equipment rentals. That Unfortunately, I really like that site. I would have loved to be in Ohio, but what I'm hearing now is that somebody's probably likely going to buy it. So they were not going to sell it to us. We did sign a contract, but we had a 45-day out based on certain parameters of for identification of energy. I think the last time we talked in the State of the Union, talked about the Argo blockchain site. They literally said that we're going to have all of it online in mid-March. That's not happening, guys. And their price is a little bit higher. They had a swap with Core Scientific. I know all these guys very well. I had the same deal opportunity. And interestingly enough, they're probably going to be online in July now. But they're also going to take it all for themselves because they're doing a little bit of a minor swap with Argo and Core Scientific in the Kentucky site, which I know them very well as well. I had an Oklahoma site that I thought was going to be a very nice gem of a site, but Oklahoma Power just raised their rates by close to 40%, and so that became untenable, and so that has impacted some of our sites that I was pursuing that were potentially going to be online sooner in Q2, like Q2, early Q3. Although what's really happening also is this construction delay systemic to the industry. What that means is everybody is delayed. If you just Google, any of these public miners, you're seeing them with tens of thousands of idle miners in warehouses, not doing anything that they bought in a while back. I have a couple of those as well, though we're plugging them in now in New York. And that has had a few impacts, some positive. One is that my initial forecast on difficulty has not turned out to be the case. I thought that all these orders were going to have homes. I thought that people were planning appropriately, that they bought some miners for X date, they're going to have space for X date. Apparently, I'm not the only one who has a little bit of bad luck, and everybody in the industry is having the same bad luck. That has slowed down difficulty, which means that this is less competition, even though this miner is being ordered. This also has a casting impact on higher costs for sooner sites. And I was pursuing all these other sites as sooner sites. And what ultimately happened is I am no longer in belief that paying the premium, because now the premium is much higher, to get something sooner in the next 3 months is worthwhile versus the long-term contract that I signed a while back, a 6-year contract, 72-month contract with Compute North. So there's limited options to host miners, which means that miner cost has actually fallen. If you think about it, if no one has space to plug them in, then why would somebody buy it? And then people who have excess miners will start lowering the prices because they don't want to carry the capital if they don't have any plan for deploying in the future, even though they have deployed many. And so this has had two impacts. Of course, with Bitcoin price going down, that has sustainably. Bitcoin mining prices have gone down as well, which has had two very positive impacts for us: better pricing on miners and a slowdown in difficulty, which means that we will be mining more Bitcoin than I originally forecasted. Although I'll admit that my newest model is probably one of my most conservative ones, as I am starting to just be err on the side on very conservative, even though our initial models were very spot on. But it's just hard to predict all these orders. You're tracking all them. I have industry insiders in every one of these mega companies, but supply chain logistics is all impacted.
Hey, Eng, one other question that came in, and you alluded to it as well, but it says if energy prices are rising dramatically in some of these areas, Ohio, Oklahoma, why do we think the same thing won't happen in the other states where we're moving the equipment to? And you'd mentioned briefly about the contract we have, and I think again to highlight that and the importance of it, just giving the spike in energy prices and why we think that these new locations are going to be good long term for us.
Yeah. So the energy price of the miners in the energy price of the miners in these other states have gone up around 20 to 30%. But energy price isn't all of what it takes to operate. It takes both the rent of the property, if it's a property, and then the operation cost of the technicians if you're not providing your own technicians, which generally adds in around 1 to 1.5 cent. So with the site in Compute North, they are the energy cost is 5.8 cents. Now, to be fair, the energy cost is around sub 4 cents. This is charging me a premium because it can, but 5.8 cents is still better than what the industry average is, which is around 7.2 cents. If I wanted to sign something for June, I would probably pay around a 7.5 cent plus 7% profit share to get the privilege of getting something in June. So these things are sort of what's been happening because people know that they can charge that. And so having scale like we do, we're able to then negotiate really low costs. And we locked this down a while back. And I thought that this price was one of the better prices I've seen. The New York site is hydropower. So it's locked in. They have also great hedges against fluctuating prices. So they eat the cost if energy prices go up. It's a fixed contract, does not change, there's no variability. In fact, and during the first week, energy prices soared a little bit, but they ate the cost because they had a hedge on it. So with the contracts in place and with the professional nature or the size of these companies, Compute North, that's where our first fund is. Very confident of their ability to manage it, and our miners are going to be neighbors with Marathon Miners, which is one of the largest public trading company, as well as Compass and other big name mining companies that will take in tens of thousands of miners themselves. So what has changed? Ohio now turns into New York and Texas. And some of you guys have read some news about New York maybe not being regulatorily favorable for Bitcoin mining. True. But the new regulations that is coming out of the state assembly is for new data centers, not grandfathered data centers. And so one of the things I liked about the New York site that it's in Niagara Falls is that they were already running for the last year and a half. And so they had extra space that they just built out that we were able to send our data center equipment to, which we're getting some income for. And in turn, they were able to provide us space as well. So good trade-off. Slightly higher cost, around 6.35 cents for around 29% of the deployment. But again, I'm just now used to higher energy costs, a lot higher all-in hosting costs. The average is likely going to be around 6.5 to 7 cents for the foreseeable future. And if you want something very premium or new now, looking at close to 8 cents. So operations start in July, as I mentioned, as April, although we'll have a partial. And to put it in perspective, our original forecast called for 4,000 miners and 500,000 hash power, 500,000 terahash horsepower. Our new forecast calls for.
And could you just elaborate a little bit more on hash power, what it is, why it's important again?
Yeah, so that's really everything I care about. I care about hash power because hash power is just the core of what Bitcoin mining is all about. One computer can generate X amount of hash power, and that X amount of hash power can generate X amount of Bitcoin. And so if you put it in immersion, you get a little bit higher hash power because you can overclock it. If you get the newer miners, you get higher hash power because they're more productive. If you have, so these hash power essentially is how we look at calculating price for buying Bitcoin miners. We don't really think about it as how much miners we buy. We think about as how much hash power we buy. And the price per terahash has gone down significantly, but they also gone down because we're buying futures. And I'll talk about it in subsequent slide. So we're getting nearly double the hash power. So essentially double the productivity of what we forecasted before. And
that's huge value. I mean, I think most investors, it's hard to probably grasp and understand, but that is very significant to the overall, business plan here. And I think, just the timing of this, it is what it is. And, I think the way we maneuvered through it and made the best of the scenario, we're actually putting ourselves in the fund in a better position today than if we had deployed and everything back in November, December, correct?
It is my greatest joy that I have. I was hemming and hawing and not locking in prices and not ordering things because I didn't have something very secure on the hosting side, because I could have bought something for a lot more than what it is now. Imagine buying Bitcoin miners when Bitcoin was at 55, 60K instead of at 40K. And I locked in this price, right, at 37K. So so
we owe a lot of credit to you and your timing, and just I know it was very stressful kind of going back and forth. We talked about this many times about when do we pull the trigger, and yes, we could have done it earlier, and we would not have been in this great position we are today. And so I think just being patient really paid off, and just trying to look at the long-term viability of this versus just, hey, let's just get up and running as fast as possible, I think is going to put us and the investors in a much better position to really make the most of this phenomenal opportunity that we have here.
Yeah, I think it's a great opportunity to essentially get miners now essentially in parallel to the dip, right? If you invested earlier in the fund cycle when we were raising capital, you would probably have lost 30, 40% in Bitcoin. If we bought those miners then, we would have gotten a little bit worse off benefit as well. So this delay has really helped us. And then another part of this delay, and of course, Bitcoin price goes down.
Yeah.
Don't blame me, but I do think that I'm very bullish on Bitcoin in the next 2 quarters. I've seen a lot of analysts show that we've essentially bottomed out a few weeks ago. So another interesting dynamic in the market is if you buy miners today, you're paying 100% of its cost. Let's say it's 100%. Every month that you delayed the order for, essentially buying it now, but you're ordering it for a month from now, you're likely getting around 3 to 5% discount on what we call futures orders. So it's a very interesting dynamic because you're essentially mining around 5% or 6%, depending on what Bitcoin price is, in value every month. So it helps to be online now, which is why me and Ryan were trying to choose something that was sooner. But it ended up being a mathematical equation where we were getting a significant discount by ordering 4 months in the future a couple of weeks ago. And we were able to get a significant discount on essentially our energy costs because we were able to wait until July. So in actuality, our April miners are a little bit more expensive in relation because it's spot miners that we had from earlier that we capitalized and purchased. But they only make about less than a third of the miners, and they're productive, and they're going to be productive now. So I'm always excited to just be mining Bitcoin instead of waiting the whole time. Can always wait, but I think it's always good to get miners going. But so this is an optimal mix of getting really great discounts and getting miners online as soon as possible.
Well, the other thing too is securing that New York site was important too, because as you can see how difficult it is. So, locking in that site for about a third of the miners, is really important and helps, kickstart things. And then we can, take advantage of just, a little delay in the other miners and the other site to get, better energy prices and better, pricing on the Bitcoin miners themselves. So the two-prong approach, I think, based upon everything we've looked at, I mean, is ideally the best case scenario for the fund and what we're dealing with today.
Yeah, definitely. So I want to highlight some new projections, and they're not going to be that different than actually our original projections or even the past projections. And what I learned is that projections, it's hard to project because and we'll share the model that underlies this projection as well. It's a combined model. So excuse me if there's some key mistakes, but it's a more complicated model than the last one we shared with you guys. But I still think that this is a really great opportunity to invest in Bitcoin mining. One of the interesting things is that when I've seen Bitcoin price stay flat, difficulty stayed flat and even fell. The last month, difficulty went down. That was not part of my projection. I projected even when Bitcoin stays flat, it goes up a little bit. So my projection now shows a little bit of some headwinds or tailwinds when that Bitcoin price does fall, which giving us a lot of great downside protection. The other thing is that I'm actually trying to deliver K1s to our earlier fund investors, and good news for those investors, they're getting close to 90 to 92% depreciation K1 loss in the first year. So I'm hoping to provide the same benefit to investors. So I want to just highlight that because I think that's a really strong benefit. It's not going to be recaptured if you're not selling it, which we don't plan to sell. And so it's just a great tax write.
Yeah, and Eng, one thing I just want to mention for investors, regarding the timing of when we receive these machines, and that, our tax benefits, those great tax benefits, are going to be for 2022 K1s. So as an investor in Fund 4, they won't be receiving K1s, correct, for 2021?
Yes, so no K1s for 2024. We didn't. While I ordered a few miners, we didn't put them to work, so there was no depreciation to be had. We did put into work. I did flip on some miners for Fund 3, even though we didn't have much on. And then for Data Center Fund, we do have depreciation, as our accountant said that we could take that. So we're still working on that. Lots of K1s to deliver. Apologize if anybody's invested in it and hasn't received it. Likely will happen in the beginning of April.
And you're talking about for Fund 3 then?
For Data Center Fund.
Okay, so for Fund 4, will there be any K1s?
No K1s for 2021.
Got it. Okay, makes sense.
And so I want to highlight that for the first 4 months, and could be 3 months, we're going to be at a partial return, so closer to 1.5%, depending on what Bitcoin price is. And this is modeled starting at around 45,000 in essentially May, and then getting investors returns at a full bore in the 5th month, although it could happen in the 4th month. I'm just being a little conservative, so it's all kind of tied together, and so that's what it's going to show for investors based on the realistic model from today's pricing.
And so, Eng, just to reset, with the projections we initially came out with in November, Bitcoin was at 60K. Mm-hmm. And so right now it's, this is reflective of the current conditions. So again, if Bitcoin next month is at 50K, these numbers change again, just so like we're working the best we can, but the Bitcoin price changes daily. But I think at least, we gave realistic projections when we first launched the fund at 60K Bitcoin, and we have a different price today, but certainly that can change in the coming months as well. So I just think that, again, if investors want to kind of compare the two, and then this one has the partial deployment, which you're saying for the first couple months, it's going to be, a small percentage of the Bitcoin mining, machines, and then it kicks in, into full gear, month 4 or 5, roughly, whenever we get everything online.
Yeah, I to be honest, I've been a little spoiled with high returns. So every time I get like 4 or 5% returns, I'm like, but then like it's 4 or 5% a month. I'm like, yeah. And then I talk to some other investors or folks who who are like seasoned investors. They're like, hey, what the heck? 2% people love that. You can go have a strong EBITDA. You can go public at a couple $100 million. It's it's maybe something we should explore. But yeah. So it's definitely an interesting opportunity. I do see a attendee asks on our comment if Bitcoin rising to 350K in 5 years seems optimistic. It was our original projection as well, so I wanted to just keep it there. It's something that I firmly believe in 5 years from now. So overall, I think we would see likely reduced difficulty if Bitcoin doesn't move that fast. So there's, even though Bitcoin price doesn't go up as much, you're going to see essentially less people be interested in Bitcoin mining because it's not going to be as profitable, which means that the current miners are going to make more Bitcoin. And if you're like me and you want Bitcoin as sort of this outcome in 10 years, right? I'm going to have close to my projection personally across all my funds and my investments. I'm going to have close to 200 Bitcoin from all these efforts in 5 years. And I'm going to not sell them. I'm going to leverage them. I'm going to borrow against them. And I do believe that there'll be $500,000 to $1 million in 10 years. And so that's sort of my generational wealth that I'm looking to. Of course, this is sort of investment in Bitcoin mining, but lots of investors have taken in cash, and they, for our previous funds, they're liking the 4 or 5% returns a month.
And we have another question here. What happens when all the Bitcoin is mined? And I think, that's not likely going to happen in our lifetime, right? With the schedule of, it's over the next 120 years or so of just the release of, and the halving event. So yeah, if you could elaborate a little bit on that, that'd be great.
Yeah, so the halving event, which essentially means it's going to be twice as difficult to mine Bitcoin, will happen in 2024. The last halving won't happen in 2020. Every time there's a halving event, if you think about it, it becomes harder to mine Bitcoin. If Bitcoin is just a function of an algebraic equation of power, computational power and computational power, energy cost into Bitcoin, then Bitcoin miners aren't going to start, Bitcoin miners are going to start buying more Bitcoin because it becomes harder. So usually when things are easy, like they were early on in Bitcoin's history, when Bitcoin was $20, $10, you were mining Bitcoin, at the boatloads. People didn't value as much. Now it's a little more difficult. And then in 2.5 years, it'll be a little more difficult then. And this model does take that into account, but doesn't take into account this stock to flow model, which a lot of people do look at and note and think that once you have a lower flow of an asset like this, you generally see higher prices. And then it will take 120 years to mine the remaining 2 million Bitcoin. It's my estimation that around 4 to 5 million Bitcoin are lost to amnesia, Alzheimer's, and just people passing away or forgetting their passwords. So don't forget your passwords. There's some pretty good solutions for that nowadays versus what it was last time.
A couple more questions that came in here. Just an update for early investor bonus yield from last year in December, just as far as, when that will be paid out. And, it's been accruing for those investors who have already put capital into place, and it will stop at the first distribution. Is that correct?
Yeah, so we'll stop that distribution. And then it's accruing now. It accrued through end of March, and we'll start mining in April. We're really mining in March, but we'll credit investors in March, and then we'll pay it at the end of the year.
Okay. And then another question, what is the drop dead date for additional money into Fund 4?
That's a good question. We're going to likely close the fund at the end of the month because we're going to be mining Bitcoin. The good news is typically it's so scalable. So if funds come in, we're not necessarily going to dilute anybody, but we're going to be mindful that a lot of our returns are going to happen in April. So if you're interested, let Ryan know. We'll probably likely close at the end of the month. We will close at the end of the month, but I understand I never want to rush anybody. So
Yeah, and we'll send this email out, or an email with the webinar replay out to everyone. So you can kind of have, one last look at, if you want to add to your position or come into the fund. So yeah, so we're getting close to closing it, and we're really excited. But yeah, we definitely want, if there's investors who have interest in more before we close it out, certainly want to accommodate that.
Yeah.
There might be one more. Okay, which would be the return for year one if, say, an investor chose cash versus Bitcoin?
It will likely look so the returns the monthly returns are actually, oops.
Yeah, maybe go back. Yeah, here.
Yeah, the monthly returns are actually the returns that you would earn, because that's essentially what we're doing the strike price at, right? So whether Bitcoin goes down after we send it to you or it goes up, we're not going to count that as sort of your earnings. So this is sort of the monthly returns based on if you take in cash or Bitcoin. Some of the later returns might be influenced slightly, although I don't think that's the case. I need to double check your model. But the monthly returns for our previous funds, we're averaging around this rate right now. And whether someone's taking cash or Bitcoin, doesn't matter. If you sell it when it goes down or you sell it when it goes up, that's your profit or loss. And same for cash. If you bought Bitcoin then and then made a lot of money, that's great.
Yeah, and one thing regarding the investor model, we're going to be uploading that into the portal, so you'll be able to go in there and download it and see kind of the latest version. So we'll probably have that, in there probably no later than tomorrow, whenever it gets, finalized and uploaded. So just so if you want to take a look at that, that's where you can get it.
So I do want to highlight the New York site. It's a bit loud. This is how loud Bitcoin mining is. This is some of our Fund 3 miners. We're with a few other miners as well. You can't hear me. That's essentially what Bitcoin mining looks like and feels like. So that's Bitcoin mining.
Can you? I can't hear the loud.
Yeah, you can't hear me. I just want to just highlight that. Don't put Bitcoin miners at your house.
Yeah, very cool.
So we're gonna be live, or we're live there now, but we're gonna be live fully probably by the first week of April. And then I just got some pictures from our partner Brett at Compute North, and these are the latest pictures of the Compute North site in Granbury, Texas. It's southwest of Dallas. So I actually would love for us, once we're up and running, to do a little field trip into Dallas and then take a tour. I'll try to schedule something once we're up and running. Don't want to bother them when they're trying to construction, but likely in Q3 for any investors who would like to join us. Ryan, if you want to, it'd be a really cool trip to show everybody what Bitcoin mining looks like at an industrial scale.
We will be there. I'll definitely do that. So yeah, looking forward to it.
So just to reiterate, we re-secured the miners. We locked the price down when Bitcoin price was at 37,000, and then we've been installing them in this month, or just actually we're at 250 miners online already, and then we're getting miners online until end of March, beginning of April. We're going to send Bitcoin to you guys in May. And we're going to, over the next few weeks, we're going to start the process of collecting everyone's wallet and getting into the operations for investors. And then in July, we're expecting to have our second phase of installation to happen. Likely will happen July to August. And then I think we'll be fully operational. So that is, I think that's it. That's the presentation.
Oh, thank you, Eng. This was great to go through and give the latest update and share, kind of where we are today and where we're heading with everything. Let me take a look and see if there's any more questions that came in. Let's see. Okay, it says the early investor bonus can be paid in Bitcoin, correct?
Yeah, it can be paid Bitcoin at the end of the year at what Bitcoin price is. Essentially, it's just an asset. I actually really think it's so interesting the last few months, and why I've been more bullish on Bitcoin overall. I think this can be three axes of macroeconomic worlds here, and I think there's going to be a world of dollars and the U.S. dominated economy, the Western dominated economy, the world of the renminbi, the Chinese dominated economy, and the new client state in Russia, I think, and then the neutral economy of scale, which is Bitcoin. I'm seeing and hearing a lot of really smart people echo the same thing. I'm starting to get really, really bullish again on Bitcoin. And right now I was a little down because mostly I had a lot of Bitcoin in January, but I'm very excited.
Great. Let's see. We might have answered this, but as it stands today, do you anticipate new funds and the timing of those? I mean, yes, we've already had investors, add to their positions. We're planning on sending this out to all investors just to kind of give one last look with the latest update. So yeah, we do intend more investors to come in, and like Eng said, we'll be wrapping this up toward the end of March, and we'll get everything up and running here since we are really close to the first distribution coming out. Mm-hmm. Let's see. There's one other question on. See from Tim, I saw Fund 5 announced through another firm. Will we have info or access through Ryan's company? Eng, I know this is something, we definitely are planning more funds in the future. We have a live fund, open right now. So we want to keep, this open as until we, get everything up and running. And then, yeah, absolutely. We're not planning on stopping here, Tim. So just know that yes, we plan on doing more funds. We just, again, our main focus is on, Fund 4 right now. And then certainly we will definitely be doing, another fund. And Eng, I don't know if you want to elaborate on that or share more, but.
Yeah, so Fund 5 is likely going to be a little bit later than Fund 4. And we do have a lot of people interested in fund additional funds. This is going to be the biggest fund that we've ever developed, and it shows by the 6,400 miners that we're going to be deploying. That is literally in our first fund. They put 400 miners, 400, and we're at 6,400 for this fund alone. I think this is going to be one of the largest funds and one of the largest private deployments in America.
And we're very happy to be a big part of that with you and with all the investors that have come in. Mm-hmm. I mean, we definitely feel like, and I think Eng, you can attest to this, from your first fund, your second, your third to the fourth. I mean, we're anticipating, I know a lot of our investors, if everything goes as planned, they feel comfortable. I mean, talking about, a reinvestment opportunity into a later fund. I mean, we expect the numbers to significantly increase just with current investor interest, but also new investors. So yeah, this Fund 4 is going to be one of the biggest, but who knows what the next fund could bring too, but we definitely are expecting a lot of repeat investors, additional investors coming in. So, but we also know that things could change in the future too, and economics can change. So we are locking in the best that we have right now with the terms, locations, the discount on the miners, because nothing is guaranteed, right? I mean, Fund 5, we could be purchasing miners at a much different cost, right? I mean, those are all factors, or maybe it could be better, who knows? But like, those are things that, again, we'll kind of cross that bridge when it happens. But Fund 4, we're making sure that we take advantage of the current market conditions and we, get the best start off that we can. And then from there, we'll definitely talk about, another one. So.
Yeah, definitely.
So another question, please clarify 25% or 29% in New York and 61% in Texas. Where will the final 10% of miners go?
So I did math equation. It's 29%, 71% in Texas. There's also another math equation incorrect. This is what happens when you put together a deck when you're a little bit sick. But it's also this two things. So 29% now in New York, 71% in Texas later in the year. And then relative to what we were expecting in our last fund, we're going to have 55% more hash power, so more computation power for the same dollar value. So that's how much more value we've received based on our new optimized plans.
This is a question regarding Fund 4. Is there any interest from a large private equity or public company in purchasing these miners from us in Fund 4? I think you could probably, share something from the previous funds, but also Fund 4 too. I mean, let you answer that one, Eng.
Yeah, it's so interesting that and because I'm so close to Bitcoin mining, I'm always evaluating selling or buying more. I think there's so many opportunities to sell miners that are plugged in, that are hashing, because that is the rarest thing of all. If you're looking at Chinese miners, which is basically all what miners are nowadays, those are the cheapest, right? Buying miners from China. If you're looking to buy miners in America, that's a little bit more expensive. Now, these still Chinese miners, they've just been shipped over to America. But if you're looking at plugged in miners in America, where everybody wants to be right now, you're seeing close to a 2x premium to essentially buying them in China. So there presents a very interesting economic argument to do that. And that's something that I might be exploring in the future, to do a hardware arbitrage fund where essentially we're buying miners, we're getting 20% returns every few months because we have a lot of data center spots. But right now, the prices of miners and where I think Bitcoin will go, I think it's just going to be great to just hold on and mine Bitcoin.
Yeah, because another part of this fund too is that we've got projections for a 5-year fund, but if the mining equipment is in good shape and it's still profitable to mine, I mean, this could go 6 years, 7 years, correct? And we that's something that's not even forecasted or modeled in, but those would be some nice long-term cash flow in Bitcoin, I should say, if we can from mine for that long of a period.
Yeah.
Okay, another question here. Are you able to share how Fund 3 has performed through these downturns?
Yeah, so Fund 3 launched recently, so we don't have full projections yet. Fund 4, Fund 1 is performing around 4.4% this past month. It's a bit short month. We had some RMAs last month. Before that, we were around 5%. And this month, I think our cost basis of those terahash is a little bit more. It's around 100 per terahash. We're getting around an average of 65 per terahash. So we're getting a lot better productivity. So I would expect our fund to have more returns per month when we're online. Of course, they had the benefit of being online sooner and getting that 9, 10, 8% initially, and now 4 or 5% now.
Let's see. If we are buying miners at a better value with a hash rate 55% greater than originally projected, why does the return not increase accordingly?
Bitcoin price is down, and the delay or really the more conservative estimation of where we're going to be online means that I'm predicting just less than Bitcoin mine. Right, every month that we're delayed, if Bitcoin difficulty goes up by 5%, we're making 5% less Bitcoin. That has happened in a few months. The last month alone was flat, actually went down difficulty. So that's why this is premium for now miners and now online miners. And so that's why these premiums exist on the hosting side, the energy side, the data center side, and on the Bitcoin miner side. So there's always this equilibrium that I'm evaluating. And I think this is sort of the best optimal potential. Now, of course, Bitcoin could go up in the future in May or June or August when we're fully deployed. And so it's hard to make any of these predictions. I think this is actually a better model relative to the past 3 months, and I've been updating the model every week, probably more than that. Except for the first, first model we built because Bitcoin was at 6K or 65K. And of course, if it goes back to 65K, all bets are off.
I mean, if it goes back to that with the the cost basis we have on the miners, we're talking about a even better scenario than what was initially laid out. It's just right now we're being super conservative, and we're going with the current price of Bitcoin, even though we've got tremendous value with the miners. We just
we're buying the dip, guys. If you think this is a dip, or at least when Bitcoin was 37K, that's when I bought these miners. So I feel very good about buying it. And by the way, I didn't buy it when that went down the first time because miners didn't react immediately. It's not like this like instant market or spot buying prices. People reacted because energy prices went up and data centers just released space. So many different factors that made it that I saw miners were one of the lowest prices I've seen since 2020. So I haven't seen these prices in a long time. And while difficulty is up, that's another tailwind. That'll be a tailwind in Bitcoin mining throughout the time. That's why Fund 4 will be likely better than Fund 5, and Fund 5 will be better than Fund 6, whatever it is. But if Bitcoin goes up, then we bought the dip, and we're going to be mining with this heightened productivity.
Let's see, one more question here. The opportunity to exit, is it only for a total investment, or can it be for a portion of it?
I think I'm open to a portion of it. This opportunity to exit is an interesting thing because a lot of our investors invested when Bitcoin was at 65K. And if I wish I could sell all my Bitcoin at 65K now, I wish I could get all my money back from when crypto and equities markets, especially, was in this height in late November. So in actuality, I'm just buying everyone's shares. If you guys want to say, I'm buying your shares because it's great value.
I'm buying some too.
But I wanted to offer this. Me and Ryan wanted to offer this because things have changed. I know that some people aren't used to volatility or whatever it is, and I can't imagine that it won't be volatile going forward. I can't imagine that it will just keep going up. It will go down, go up, and that's just the nature of this new emerging asset class. But I wanted to provide people sort of ability to, let people, essentially get a really favorable exit if you so choose. I'm so bullish on it, more so than I've ever have, except for when Bitcoin was 66K. But I want to make sure that everyone who's in it with us is as bullish as I am, because this can be a long road ahead of us, and we're going to be sending Bitcoin every month for hopefully more than 5 years.
Okay, we got a question here. If energy costs rise unexpectedly in New York and Texas at our sites, can miners be unplugged and moved to a better energy site? If so, do you have contingency plans to do this?
I do have some contingency plans. That has always been the case. I do think that they have contingency plans, and I've talked to them at length about their contingency plans. They have good hedges against energy. For Texas, it's locked in. That's just how it's been in ERCOT. One of the great things about Texas is that there was a tornado storm yesterday in Texas. And I'm hopefully everyone's okay. But what happens is Bitcoin miners are the first to unplug and get really significant energy price discounts because they can unplug for 0.5% of the year, and so that's sort of and that's load management, and that's a lot. We're signing the same contract on that side. Compute North is one of the largest players in the data center space. Their focus is solely on this. It's a land grab war. I'm an early investor in that company, so I'm privy to a lot of their information. They get a lot better contracts than me because they're buying hundreds of megawatts at a time across the country, and they're really close with all the energy providers. So we're taking advantage of their scale. They're taking advantage of our scale, and we'll be I'm very confident of these, and happy to share the contract and everything with you guys.
Great. Let's see. With the lower cost of miners, do you still anticipate roughly a 7 to 7.5x multiple as originally forecasted, or is it too difficult to determine at this point?
Yes, that's the case. 7.4x. So I didn't put the multiple in, but it's same 7.46x.
Okay, so even if like initially distributions look like they're going to start off a little bit lower because of Bitcoin price and because the two-prong approach of the locations, I mean, we're still very bullish on the back end overall. I mean, 7.4x multiple projection is in line with what we initially projected.
Mhm.
So
Yeah.
I think that's capturing a lot of that value, right? With the Bitcoin miners getting it at such a discount that even though Bitcoin is down, we're still kind of holding the overall equity multiple projection, correct? Okay. Let's see. What would be the return for year one with a flat price scenario?
Depends on what you think flat it will be. If you believe it's 45, I'm looking at the model right now, 45,000, which is where I'm modeling out the realistic scenario as well. For the whole 12 months going forward, it would be 42%. And this is taking account the first 4 months as a 29% partial deployment, not full. Second year would be 46% returns to investors. So you get paid close to after 2 years.
Okay. Let's see. I think we've gone through all these questions. If there's any more, feel free to type away. If we don't see any more come in, we'll wrap this up. But just know that we're happy to answer any questions offline too. The intent for this was to really give an update as we get ready to kick things off here, and for all those investors who've been with us early on, we just wanted to be as transparent as we could with the current conditions and share these updates with what's kind of been going on behind the scenes. And you've done a phenomenal job just using your relationships, connections, just everything to tee this up and to get us the best pricing and the best locations, and really just maximize the opportunity that that we have here to mine the dip.
Yeah,
let's see. Okay, yep, we got a few more here. I think one more. What is the total size of fund four? Trying to get a sense for the size of my investment as a fraction of the fund.
Yeah, so my latest calculation is based on 35.2 million. I think it'll go up a little bit. I've seen a lot of people come in. So we do have some additional miners that I have also contracted out to then deploy for August. So just add up a little bit more.
Yeah, and so we are getting close to the fund even being filled up from a dollar amount too. I mean, so I mean, maybe 40 million. So yeah, we might not even make it to the end of the March if it does fill up. But
I have plans for the additional 5 if that comes in. I do think that it will. And this is not including sort of this amount that I have in my head that I'm going to put in, which can be significant.
All right. Let's see. We have update on the data center fund. I know we sent out an email to all the investors in the data center fund, but for investors who maybe want to participate in that, is there still an opportunity? What's the timing on that as far as distributions go? And I know, we're going to be operating that out of the New York site now. So yeah, if you could elaborate, that'd be great.
Yeah, so we bought the equipment in the end of the year. So we were getting depreciation on that. We were going to put it into work for Ohio, but then our New York partners said they needed that same equipment. It was a great opportunity to essentially do a little trade, get some space, get some fees and income to cover the returns for investors. And I'm proud to say that we're going to start setting the first distribution in April. And if investors want to come in, feel free. I think we can definitely accommodate a few more investors. And then if you're coming in the end of March, probably get the distribution in beginning of May. Although we'll try to accommodate everybody.
Yeah, and those investors who got in early, there's been an accrual of their funds, and they're going to be made whole right on that next distribution.
Yeah. There's a lot of investors getting like 3% the first month.
Yeah,
because they've been with us for 3 months.
Yeah. So that's great. And the other thing on the data center fund real quick is 100% bonus depreciation. If you're coming in now, that's going to be for 2022, correct?
Yep.
Okay. Let's see. One other question here. Do you have any concerns about your sites and potential ESG requirements from the government?
Yeah, so the mix of New York is mostly hydropower, and the mix of Texas is mostly solar, wind, and nat gas. And I do believe that most people think that the government thinks that nat gas is considered a pretty friendly ESG energy source.
Great. Okay, well, that does it. A lot of great questions from investors here. Thank you all for joining us and for listening along, and really, hopefully the update here was very helpful for you. And Eng, once again, thanks for your time. This is always great to get you on here and share the latest and just the insight, kind of inner workings of what goes on behind the scenes here. I think it's helpful for investors to know. So we'll definitely keep you posted. As we mentioned, likely the next week or two, we'll be sending out an email to investors to elect how you want to receive your distributions, whether that's Bitcoin, ACH, and then we'll provide further updates as we get closer to that first distribution going out. And I think that's it. Eng, unless you got anything else to sign off on here with.
No, I appreciate everyone's time. Thanks for attending, and looking forward to sending everyone some Bitcoin.
Yeah, I look forward to sending it and receiving it. So
Yes.
thanks again. This is great. And everyone have a great night.
Have a good night, guys.